The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, well, I guess this is the radio show. I think this thing in front of me is a microphone. I'm not sure. After being gone for 3 weeks of being on an airplane, you know you're flying too much is when you get on the plane and the stewardesses call you by your first name. So I will tell you the highlight of the trip was when you come back into the United States in Los Angeles and it says you're entering the United States of America. It gives you a warm feeling, and I still get goosebumps. The trip was a lot of fun. The highlight of the trips, there were three things that were fun. One was the live trading in Hong Kong. We had a big ABCD in the Hang Seng coming in at 20,000, and it hit 19,995 and has rallied 2,000 points. And, everybody got really excited about that, which was good. And I had several students that I had not ever met, and going over several years, that flew halfway around the world just to come to meet me. And that really made me feel good. And they told me some nice stories, which was good. And then we went to Shanghai for live trading, and I had to have an interpreter. There were over 100 people in the room doing live trading, and when you have just one day, the only thing you can really do is cover A, B equals CD, and so we did the euro and we did the gold on a 5-minute chart, and we had several absolutely beautiful A, B equals CD patterns. And to see these Chinese folks with their little pencils looking up at the thing in Chinese, trying to figure out the ABCDs was really quite amazing. But they were starting to see it, and it was to see the excitement, and it was pretty good. But actually, the fun part was the next day. Sarah and I had a day off, and we got to take a bus ride wherever we go in a different city. We like to get on a city bus and ride with the folks, to see the city. So we walked to the terminal, which was about 4 blocks from our hotel. And we got on a bus for 60 cents, and we took an hour-and-a-half ride one way and an hour-and-a-half ride back the other way. And after we left the financial district of Shanghai, which is absolutely spectacular, it rivals London and Hong Kong. It's really amazing. But, folks, when you get 25 minutes outside of that downtown financial area, you better be saying your prayers, because it's really, really rough. I have never been, only one other time have I been in a slum that is that bad. The water in the canals was slimy. I mean, it was just really terrible. The people looked happy, but the lifestyle is certainly different than what we're posed to here. So it's really amazing, how we got a lot of problems in our country, but we got a lot of good things too. But there's a lot of things that we don't see in other countries because they're not reported, and unless you see them firsthand, you really can't fathom, what it really looks like. We've seen it in other countries too, but to see it so close to such a spectacular financial center is really amazing. The Shanghai Stock Exchange is a 100-story building, and it is huge. And we do more in the New York Stock Exchange in the first 20 minutes than they do in a week. So they're preparing for the future, I suppose, but it's just totally different. So we'll get on to the markets. We've got some really interesting things happened since I left in March. It looks like the main question I get in emails is, has the Bradley model finally topped that we were looking at around the 29th, I believe, of March, and I'm not really sure. We did make some lower lows from the previous week, but we really need to get below last week's low, which in the S&P, which would be around 1352. Then it would have a pretty good idea that we are headed down, and it should be down at least for several weeks, 5 to 6 weeks, because we haven't had one of those corrections, for months and months and months. And that's usually, when they happen is when you're not expecting them. The main thing, Steve mentioned this, and so did Tom in this show, is that we have perigee coming in. And we also have a new moon coming in on the 21st and 22nd. The new moon's on the 21st. 22nd is perigee, which means the Earth is as close as it gets to the moon. And that causes some gravitational things, especially when it starts to pull away. But the big thing is on the 23rd. And that is when we have a P-index date. There are actually only three aspects that day, and so we should have a really, really active market on Monday. Because it's going to be pretty. A lot of those cycles are coming together at the same time. The Bradley model cycle ends at the end of the week, so there's going to be some fireworks. I believe. I think we're going to start seeing some bigger volatility, than we're having right now. In fact, the volume in the first hour today in the New York Stock Exchange, when I saw it, I thought the guy gave me a bad figure because it was so low. It was just absolutely amazing, how low, the thing was with volume. And as I mentioned several times, Joe Granville, who happens to be a friend and writes the Granville letter, says that volume precedes the trend, and this is the lowest volume we've had in a long time. And he is extremely bearish just because of the volume and the fact that the insiders are selling, at 6 times what they're buying. Gives another reason why I think we could be going down. And of course, looking at the Bradley model is also interesting. Oh, by the way, I have to bring this up. Is when we were in Shanghai, one of my students from China that had done some work on the Bradley model on foreign markets. He took the Brazilian market, and he took the Hang Seng and 2 other markets, and he ran the Bradley models on that just to see if the cycles on the Bradley model were the same for European stocks and South American stocks as they were, and Asian stocks as they were for the U.S. stocks. And frankly, it was really amazing that the correlation was extremely high in that 75 to 80% category. So the Bradley model seems to hold up on just about any market, but like we've said many times, it's certainly far from perfect. But it does give you some, good times to, invest at times, and I think we're over one of those times right now, and we'll have to wait and see. Now, I know this is the commodity hour, but I had to cover the stocks, but we really need to cover the bond market here, because this is one that I really think we still have a chance to get up to the that 149, 150 level in the June bonds. We stopped at the 382 retracement. I believe that's when I was leaving. I think it was the week of March. We had hit that 382 retracement at 135, and we've since rallied 7 points. We only need another 7 points to get to our target, and whether we're going to make that or not, we'll have to wait and see. But we still have a chance for that, and that would get that TBT down to that 1680 level if we can get there. I'm not sure it's going to make it, but the fact that it could only make that 382 retracement on this last big correction from January through March gives us still a chance, that we could be getting it. It's amazing the amount of debt that's out there. I mean, that's all they're talking about on Bloomberg and CNBC. Is the fact that Spain is getting their debt, and France is getting their debt, and England is getting their debt, and so it's just amazing. Everybody's borrowing money hand over fist, and why wouldn't they with interest rates at such low levels? I mean, here Spain has got a horrible credit rating, and yet they're able to sell bonds with a 2-year yield of 3.3%. I mean, it amazes me, but that's how the financial markets move. So we're going to keep an eye on these bonds. We're going to be a little bit more patient. We've been patient so far, so we want to be able to take a look at it. Now, the other thing that we have to talk about is because this is the commodity hour, is the fact that the DBA has we've been watching this for an awful long time. That's the ETF for the commodities, and we have had a breakdown below the 618 since the last time I was on the air. When I was here last, we did have a failed Gartley there at the $28 level because it broke the 61% retracement. and continued on down, and now it looks like it wants to go to the 25 level. Now, I want to mention something here, because these ETFs, they act a lot different than the overall commodity markets, because if you look at, we're going to look at these, we're going to look at corn, and we're going to look at wheat, and we're going to look at the soybeans, and we're going to look at rice, and you'll see that all these are in really good strong trends, and they've held very, very good support levels, whereas the the DBA has not really done that. Now, so you have to look at each one of the commodities separately. So keep in mind that these ETFs, they act a little differently than the underlying market themselves, and that's the main thing that we have to keep in mind, and that this is what happens. And if you remember, I believe it was sometime in I think it was. Let me pull this up, and I'll get the chart for it. It was in early March. We were looking at this huge butterfly pattern that was happening in the cattle market, and we had a big break in the cattle market, and it stopped exactly to the exact tick of the 61% retracement off of the low of last July, and that has rallied better than 3 cents a pound, and we broke from 131 a pound down to 117 a pound in cattle, and that was based on, I believe, the pink slime thing that was going on, and I don't know what that is, but I think that's the flavoring in hot dogs that I like so much, so I'm not going to complain too much about the pink slime, because when I go to Costco, that's the highlight of my trip to Costco, is to have one of their hot dogs, and that reminds me of the pink slime when I have it, but it's still delicious to me. We have a situation in corn that has been really interesting, because we're in the middle of the planting season now. Most of the corn has been seeded, and we have just completed some really serious patterns in corn. We just made a major AB equals CD in the corn market. We did that yesterday, and we as long as corn can stay above the $6 a bushel level, we hit that last night, yesterday afternoon, and then again last night, and we've had a very, very strong rally today coming out of all the grains. And we completed that big ABCD in corn. If you get a chance to go into Tiger TV and take a look at this ABCD that we had in corn over the last 3 or 4 weeks, you'll see how perfect it was. It stopped exactly at the 786, which was a double test of the retracement that we had from January, telling us that we have a lot of strong support there. And so, we have to really, keep an eye on this corn, because if it starts to move, it could move, $3,000 or $4,000 very quickly. And the margin on the corn, isn't that bad. So, keep in mind it's a possibility here for a pretty good move in the corn market. If you have any questions, we're at 877-927-6648, and I'll try to answer these. We're going to take a little break now to pay some bills, and then we'll be back to talk a little bit more about the wheat market.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, folks, we're back. If you have any questions, it's 877-927-6648. I'm going to cover the grains this first half hour, and the second half hour I want to get into the gold and silver, and then also we need to cover the oil complex and also natural gas, because we're getting down to levels that we talked about a month or so ago when we broke that 245. And, we're getting down, in fact, to 119 today, and I believe, 190, and I believe we're looking somewhere around 185 to 1. I'll bring the chart up a little bit later and let you take a look at it. But we need to talk a little bit about wheat, because it also stopped yesterday at the 786 retracement and has had a really big move to the upside. And so this is something that you want to keep an eye on, from the upside. So if it does that with corn and all the other things, it makes it look like it's going to be, pretty interesting. Now, though, there is one caveat that I have to talk about with the grain market, and that is the soybean market on the long-term weekly chart. Now, if you'll take a chance, take the time to go into Tiger TV and take a look at this long-term weekly chart going back to 2008, because we have tested the 786 retracement up at $14.50 a bushel, and this is the third time we're testing it. And if these grains should happen to roll over, and this could be the reason why DBA going to the downside, we'll have to wait and see, because this support that we're talking about here that stopped yesterday is very, 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 very powerful support. And if it fails, it's going to break down a great deal. This is the same situation that happened, when the natural gas broke down at 245. It was the same thing. Once it broke there, it's pulled like a magnet down to the to the next price level. So we have to be on top of this, because if these things roll over because of a debt problem, and I still think this whole thing that we're talking about in all the world is related to debt, and we'll have to just to wait and see. But this is what we're looking for in the beans. They're going to have a little bit of resistance up here at this 1450 bushel level, and like I've said, in the corn and also in the wheat, we've had major support hit there last night. We've had a big rally today, and we'll see if this rally is going to hold. But that's what we're going to be looking at in the grain market. The cattle should have a pretty good bottom off of that 618, because they've rallied over 3 cents. So nothing's really dramatic in any of that so far. But if you'll remember, back in 2008, when the stock markets of the world rolled over, the commodity markets were not too far behind. And we've had situations in gold and silver that are very, very important because of the support that's been here over a period of the last 6 or 7 weeks. And we want to be able to, to look at that in depth, because we have such strong support at 16.20 in the gold, and we're only $20 away, and we could easily break that. And if we break that, then the problem arises that we might have a serious down move, in these metal markets, and we'll cover those when we come to the next break. But we want to finish up the first half of the show here to reiterate the importance of the lows that we've made this week in the corn and in the wheat contracts. They're very, very important, and I think that if we keep that in mind and they break below that, we want to be alert to the fact that this could be an effect on all of the other things in the economy that we're looking at. So just remember that that's what we're going to be that's what we're going to be doing. Now in the rice market, we have, and believe me, when you travel to Asia like I have over the past 3 weeks, you learn to eat rice just about at every meal, and we've completed a bearish Gartley pattern in the rice market, coming off of a major head and shoulders pattern, and we have some resistance in the rice at 15.50 a bushel in the rice. So we'll have to wait and see, that's going to go out. But we're at a real critical level in all of these commodities, folks. Let me tell you, you can go right down the list. You can look at gold and silver, crude oil. As a matter of fact, if you get a chance, take a look at the newsletter. It shows, all the different the commodities that we're looking at, the major ones that hold up at these levels, because they're very critical support levels. And believe me, they're not anywhere near where they were in 2008. Remember, in 2008, crude was at 144, and it's at 102 today. So we're going to take a little break here. When we come back, we're going to take a look at the gold and silver market. 877-927-6648.
You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations conditions, including price targets and price stops. As recently as March 21st, Market Insight subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, your ultimate trading mastery system, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices, along with commodity and Forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
Folks, turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more, and that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion, and for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. These are the best-kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk, and you get all the benefit. Go to the homepage at TFNN.com and sign up today.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks. This is Larry Pesavento for the TFNN Futures Hour. We have a situation now in silver where we have very strong support at $30.50 per ounce. That's the 61% retracement. If you look at the long-term chart that we posted in Tiger TV, you'll see that it's been in a downtrend since late April when we had that parabolic blow-off into the 49 level. And now, we're down to the major support here in the 618 level. The problem is, folks, that we're not getting much support in volume or open interest. There are no new players coming into this. It's basically the players that are there beating each other up. And so there's really no trend, supporting it. But we should have some pretty good support at $30.50 per ounce in the silver. The gold market is a little different situation. It also has had a downtrend since September, and we are looking at a possibility here of breaking below the 1620 level, this very important support that we've had at 1620. And the reason why I think it's going to break that level and get down to around the 1580 per ounce, which is the 786 retracement off of the December lows, that would complete a Gartley at the 786 at $1,580 per ounce. And it would be another AB equals CD move at that time. Actually, there'll be two AB equals CD moves at that level. And so that's the level that I'm waiting for. So, we're going to keep an eye on this on the show, each of the shows that I do on Monday and Wednesday, but also, of course, the commodity show. But I believe that that's where we're going in the market. Now, let's play the devil's advocate here for a minute. If we break below 1580 and get down below 1550 or something like that, folks, this gold is going lower. It's probably going to go down to 1300. And if you look at the gold stocks, they have not been performing very well. And so compared to the rest of the market, it's been really a one-way Corrigan on that. The gold stocks have been absolutely horrible, versus the rest of the market. So if we can hold this level at 1580, and in fact we might even hold the 15 or the 1620 again. I'm not absolutely sure of that, but the fact that we couldn't rally very much off of the 1620 tells me that we're probably getting ready, to make another push down to that 1580. And remember, write down on a little piece of paper, because if we go below 1550 an ounce in gold, I think that's going to set up a tremendous move to the downside of at least several hundred more dollars, and that means that silver would be breaking below the 3050 level again, and that would set up much lower prices in the silver also. We've had we talked about copper several weeks ago when it was up in that 390 level, that it was forming that big pennant, and it broke to the downside, had a pretty good break of about 30 cents, and has had some type of a small bottom here with the rest of the stock market. But it, in fact, too, looks like it's has a bearish scenario. I know a lot of you folks are involved in silver and gold. It's a great trading market because it jumps around a lot. But we are at some real supreme points now in these markets at 30.50 in the silver and at 15.80 per ounce in the gold market. We've got a call from Robert in Lexington. Are you there, Robert?
Yes, sir. Glad to hear you're back on the air, Larry.
Well, thank you very much. What can I do for you?
Well, I've been with you on the bond trade, watching it come together, and hopefully it will. I just wanted to tell you how I've been playing it. I did have I was doing a spread on the TBT, selling the April 17s and buying the June and the January 13 17s. And, of course, I rolled my Aprils up to May. And if we get that move next week, the turn date works, and when the market sells off and the bonds go up and we get below 17, then I will end up with nice trading positions, long on the short bond play, for a lot less than just buying them outright.
Well, I think, when you can do option strategies like that, my hat is off to you. I'm a flat trader. I basically look at the futures themselves. I seldom do puts or calls, and when I do them, I usually just do a naked put or a naked call, and usually not very many of those, because I trade the futures market so much that it's quite a bit easier for me to do that. But I agree with you. The fact that the notes could not take out the lows of last November like we did in the Treasury bonds, and they've already rallied back above the 786 retracement, from the February the early February highs. So it doesn't take much for them to to get up in a new high ground, and that would get us up to that level in the bonds of that 149 level, and that would get TBT, I think, pretty close to that 1680 level. And of course, we have to be careful of what we wish for. Remember?
Oh yeah.
Yeah.
Well, you got 30 years worth of people being bullish on bonds, so there's a lot of people around who be more than happy to step in there and buy them up for us, I think.
It's really amazing, Robert, when I look at it on a worldwide basis of how much debt is really out there. It's really quite it's startling how much debt is really out there. As a matter of fact, someone sent me something that I thought was really interesting, and if I can get it, I'm going to put it into the den just to show you how much a billion really is. And we're talking about things here in the trillions, and it's really amazing.
Trillions are almost beyond imagination.
It truly is. In fact, I'm going to put it in here, and just to let people know, it says a billion seconds ago, it was 1959. A billion minutes ago, Jesus was walking around, and a billion hours ago, our ancestors were living in caves, and a billion days ago, no one walked on this earth. And now they're talking trillions, and so you can imagine what what it really is. It it blows my mind when I think about that. You're probably too young to remember Everett Dirksen. He was a senator from Illinois, and he was always against spending, and he would say a billion here, a billion there. He says pretty soon you're talking serious money, and now we spend in 8 hours, 8 hours and 20 minutes, we spend $1 billion over the amount of money that we take in for the government. And so,
they're going to have to rephrase that to a trillion here, a trillion there. You're talking real money.
Yeah, that's for sure. I was almost 100% sure that someone would come on at least call in and ask me about Apple, because I noticed while I was gone, Apple did actually have a correction. Unless I was wrong, I think it went from 600 to below 600. So I was really surprised to see that, because when I was in Shanghai, I had an interpreter, and of course it was really difficult trying to teach through an interpreter. But the young man was very good. He liked trading, and he taught English in the high schools, and so he was pretty good at it. But the one question that I asked that everybody answered at once, I said, "What is the biggest stock in the world?" And it was amazing. Everybody just said Apple all at the same time. And I said, this is the first time in all the years I've been in the business that no one has bearish that stock, and that it was on its way down for some type of correction anyway. So we'll have to wait and see. But anyway, listen, thank you for calling in, and we're going to be watching these bonds, because it's going to be real interesting, before we understand the ramifications of the whole thing.
Yeah, I think you're right about the silver and gold too. I think they're going to be going down as those bonds top out. I think all of this is going to be popping next week.
Well, we've got a big day coming in on the following Monday, because that's going to be the day where we have this huge, P-index date and the lunar thing. So we'll see what happens.
All right, great to have you back.
Thank you for calling in, Robert. I appreciate the kind words. Okay, we're going to take a look at natural gas now on a weekly basis. Going back to 2005 when it was up around 16, and now we're down to $1.91. It looks like we're going to get to about 169 to 170. We've got another 20 cents to go. That's on the long-term weekly chart. Frankly, when this thing does turn, it's going to be a really big move, but you're going to have to be really careful, because it has some, really strong downtrends here, and you want to be able to, try to keep yourself from getting killed. And if you remember, back in March, I believe, we were looking at this thing at around 240 and 245, and it held really well for a while. And once it broke, actually it was 245. Once it broke that, it gave a pretty big move that it was going to go down to a lot lower level, and we're getting really close to on the daily chart that comes in at around 185. And there's some cycles there that if you do have an interest in natural gas and take a look at the Tiger TV, you'll see that there's a 2-week cycle that comes in and gives a pretty good rally every so often. But frankly, you want to wait till it gets below the 185 level, and then we'll take a look at it, and we'll see if it actually is going to make a turn or not. But that's either here or there for that. We need to really take a look at the crude oil market. We've only got, time goes so fast. I can't believe that that the time goes this fast. I really missed you guys, I guess, because I actually enjoyed doing the radio show. It's just that I had so much going on in the time constraints and moving around. There was no way I could, legitimately make a show every 3 days a week. It was just impossible. But I'm back for quite a while, I hope. I think I'm staying until tomorrow. Actually, a little longer than that. But we need to look at the gasoline futures. Because that's all part of the crude, and there's a really good possibility that we've made a triple top-up in there because we've come off over 30 cents a gallon, and it's going to be really amazing. We made a big ABCD up there at that $3.50 a gallon, and now we've backed off from that. There's a possibility that is a triple top, very similar to what we were looking at with the soybean market. And whether that's going to happen or not, we have to keep an eye on it. But this big weekly reversal that we're having this week, gives us an idea, that we're getting pretty close to, something, really serious happening in the gasoline market. Because if it was really good, it should have went, popping through, without too much trouble, and making it look like it was going to be at least a pretty good run, much higher than it went, and it stopped, right at $3.50 a gallon. The other one, of course, that we watch all the time is the crude oil market itself, and it's backed off very quietly here for the last 2 weeks. We had a lot of resistance up at that 107 level that we talked about. And that was nothing more than a 786 retracement of the move that we had. And for the past 8-9 days, all we've done is made a 61% retracement. This market still looks like it could go higher. There's nothing. The key number to look at here is $98 a barrel. If we get below that, that means it's going to be breaking the February lows, and that would really be a bad sign. To take to be long oil if it does that. But right now, it's just have a nice normal correction of 8 days. In fact, very, very minor. It's only come down from 108 and change to 102. That's only $6 a barrel in 8 days, and for that market, that is virtually nothing. So the oil still looks like it's moving in the right direction. The caveat here is the gasoline, which is a big part of the crude oil. Could it be making a major top in here? So we have to be prepared for that. And what I'm trying to get through today, as far as the theme, is that all of these commodities have hit major support points, and also on or resistance points, like we've seen in gasoline and we've seen in the soybean. So we are at a critical level in many of these things, and this is what happened to us, when we were in the market in 2008. These are the things that made the market look like it was going to be a as far as what am I trying to say? It was going to be a bear market because of the commodity markets going down. And remember, a lot of these hedge funds that are in here cannot, come in and do a lot of things with commodities because of margin calls when everything else is going down. Now, on a shorter-term basis, we had something really interesting happen over the last 5 trading days. After we had the big move in April coming down in stocks, I want to move back to the Dow Jones now because we're at a critical level. We have completed yesterday on the 18th. We completed a bearish Gartley pattern where we had an AB equals CD move coming from the low down around that 12,700 level, and then we rallied several hundred points. We got to take a little break here. We'll cover this pattern again when we come back. 877-927-6648.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, we're back with Jim in Palm Harbor. Are you there, Jim?
Yes, I am. Welcome back, Larry. I was pleasantly surprised to look in the den and hear your voice, so we've got about a couple minutes left. I just wanted to ask you about, I don't know if you've covered the June E-mini futures yet, but your chart tells a lot of answers right there looking at that complete ABCD.
Well, what happened is, right before you called in, I put the Dow Jones up, and it had made the big AB equals CD up at the 786 retracement, and with the the E-minis, we've just barely made a 50% retracement, and we could hardly take out the highs of the 12th. I mean, last night during the Spanish debt thing that was going on, I happened to be having jet lag, and I was still awake, and I watched the futures jump up, and I had a beeper on at 1890 because I wanted to see what happened. 1390. Right. I wanted to see what happened. When the market got above there, because that was the old previous high, and it hit 1390 and dropped 5 points really quick, and I would have suspected that it would have been a lot stronger, and then we found out that the Spanish yield started to go up. But it looks to me like the Dow led the rally back. The real key level here is the low on the 10th at 1353. If we go below that, I think the Bradley model is going to be right, at least for the next 3 or 4 weeks to the month, and we'll have to wait and see. We've got a really big date coming in on Monday. That's that could really be a monster of a move then.
That's this coming Monday, the 23rd.
The 23rd, yes, and not only that, those are astro things, but there's some things that are geometric that I have a lot of friends that do a lot of geometric work with the angles and with the rate of change of moves, and their prediction of dates come very close to some of the astro things they look at, and when they come together like we have coming in on the 23rd, they usually are pretty wild, and so I'm expecting something pretty dramatic coming in on Monday. So we'll have to wait. See, we only got we got a half a day today, and then tomorrow, and then that's it. So we'll have to be interesting.
What's kind of interesting also is I'm looking here. The IWN and NOIA have been. They broke the 50-day moving average. They've been having a hard time even challenging it, getting back to it, and now we've backed away from it again. So that's a good sign.
It really is. Jim, you mentioned the 50-day moving average, and in the Chinese paper in Shanghai, they are where we were in 1930 as far as technical analysis, because the only thing that they show is the 50-day moving average. I was going to send Basil a copy of it. In fact, I am going to do it. I made a copy, and it's really quite simple. You know what? I have a copy for the den. Just a minute. Let me. I'll put it in there, and you'll be able to see it.
While you're popping up, I'm just going to ask you a question. I've
Sure.
been actually shorting every time we hit that. We break the 85 on the E-minis, and then do you carry those overnight, or I've been just closing them out at the end of the day because I don't really want to be getting up at 1, 2 o'clock in the morning to see what's going on in Europe and Asia.
Well, I work with the hedge fund, and when we put a position on, we don't really day trade it. We might trade it for 2 weeks or something like that, but usually what we're doing is we're putting it on. It's going to last several weeks. Now, we do for Forex markets, we will do more of a swing trading because the volume is so big that you can actually do some of that, but you frankly can't do it with the with the E-minis. We're basically playing that for a larger move to the downside. We're not involved in the NASDAQ at all, but we are involved in the NYSE and also in the S&P. That's one of the reasons why I needed time, because excuse me. Go ahead.
No, I was just going to say, I'm glad that you pointed out Monday's date, because now that I laid on these positions this morning at 1585, we're down.
Well, if the close is good today, you got a good shot for Monday.
Thanks for your help.
Thanks for calling in, folks. And I'll be back on Monday for the regular show. Have a nice day, everyone.